What's going on, guys? My name's Emmanuel and welcome to my channel. And I have to confess, guys, I haven't showed the UK companies any love on my channel, and it definitely hasn't gone unnoticed by you guys in the comment section. I keep getting asked why I don't talk about UK stocks, and it's simply because up until this week I hadn't invested in any UK stocks. And I'm not the one to talk about stocks that I wouldn't invest in myself. The UK is also dealing with the Rona, and don't forget, guys, we're not out of the clear yet with Brexit. That's still going on in the background, but obviously doesn't get media attention because we have bigger issues at hand with opening up the economy, etc. So that made me hesitant to focus on UK stocks, to be honest. However, this week, something massive was announced by the UK government that caught my attention. And off the back of that news, I had a look at companies in that particular sector. And guys, I'm happy to announce, yes, I eventually popped my UK stocks cherry and I picked up my first set of shares in a UK company. So for this video, I want to bring this major news to your attention and explain why I think this will be massive for this sector in the UK, what top 3 major UK stocks I believe stand poised to capitalize off this new change, and lastly, we're going to run through their financials as we always do, guys. Don't forget to smash the like button as it helps with the YouTube algorithm. And if you're new, I want to say welcome. And I hope you gain a lot of value from today's content. And if you do, consider subscribing, as it'll be really cool having you on board. With all that said, guys, let's just dive straight into today's video. Alright guys, so what's the major news? Okay, so this is the news that got me interested in UK stocks once again. And it was a news that broke where Boris Johnson announced this week new regulations making it easier for property developers to convert existing city centre commercial properties into residential properties without planning permission. Now, this is huge, guys. And if you're not sure what planning permission is, so planning permission is pretty much the process of asking the government, or you go to your local council, for permission to change the use of a property. Or if you wanted to build a new property and a new piece of land, you have to get permission. Or even if you want to make exterior changes to your property, you need to seek permission from the government or your local council, okay? So I'm going to take you to that news article right now. So you can access this article from gov.uk. So the key points from here is Boris Johnson has announced the most radical reforms to our planning system since World War II, making it easier to build better homes where people want to live, okay? So the new regulation will give greater freedom for buildings and land in our town centres to change use without planning permission and create new homes from the regeneration of vacant or redundant buildings, okay? The next line says, under the new rules, existing commercial properties, including newly vacant shops, can be converted into residential housing more easily. All right. And the final part of the article that got my attention, guys, was here. So these announcements come alongside a package of measures to support home building across England. So a 12 billion affordable homes program will support up to 180,000 new affordable homes. Okay. So I'm going to take you back to the slide now, guys. Alright guys, so here are some key points from the article that we just read. So greater freedom for buildings and land in town centres to change use without planning permission. And if you've ever tried to convert a commercial property into a residential property, especially city centre property, it is a ball ache, it is a nightmare, and there's also fees attached to the application. So that just makes it a whole lot smoother and encourages more conversions, okay? So retail shops, you got your pubs, your clubs, etc. can now be converted into residential housing more easily. So that's going to definitely boost the residential home industry. So the purpose is to create new homes from the regeneration of vacant or redundant buildings. Now bear in mind, guys, the types of properties we're talking about are commercial, so your retails, your shops, pubs, clubs, okay? And the government will actually support this drastic change with a 12 billion affordable homes payment package, okay? So I think this is incredible news for UK stocks and businesses that are in the residential space right now. So you now have greater freedoms to build new homes, which of course will then increase revenue And with an increase in revenue, with great management in place, that will definitely have a significant positive impact on their bottom line. So we're talking about earnings, okay? So they also have access to additional funding from the UK government if needed. I mean, the UK government are really pressing forth for more residential homes, and I think this is incredible because even if you have a company that might be tight for cash, the UK government have said they're pretty much going to help. So this is all exciting stuff, guys. But I also think with that, it also spells terrible news for the commercial industry. So if you own stocks or businesses that are in the retail space, especially those that are now on the verge of bankruptcy, this ain't looking good for you guys. I have to be honest, this is not a good time for you guys. So you have to ask yourself, guys, is this the final nail in the coffin for retail? You know, as consumers move more online, all right? So I'm going to give some examples, some really big names in the retail space. You have Into Properties, ticker symbol is INTU.L. And you know, this is one of the big shopping center owners in the UK. They own Lakeside, which is in Essex, you know, massive shopping centre. Trafford Centre as well, which is in Manchester. Again, another huge popular shopping centre. But let's look at what they're going through at the moment. All right, guys, so here you have an article that was published on the 26th of June by The Guardian. It says, shopping centre owner into collapses into administration. And this is becoming quite a common theme amongst retail stocks and retail businesses. You know, shops are barely opening right now. They're not being able to collect their rent. And without that rent, they're falling further and further into debt. And now into have actually collapsed and entered into administration, guys. You have another company called Hammerson's PLC, ticker symbol HMSO. They own the massive shopping centre in Bullring, which is in Birmingham. You also have Victoria Gate, another huge shopping centre up in Leeds. And what I wanted to do with this company is just highlight their financials, okay? Rather than show you a news article of them struggling, I just thought, let's just take a look at their financials for comparison, okay? All right, guys, so we're on the balance sheet for Hammerson, and just take a look at their total cash position. They have £28 million in cash, okay? And their total debt, look at that, they have 2.63 billion in debt. That's crazy. That is absolutely crazy. Okay. Yes, they've got a good current ratio, which might keep them afloat. But look at their cash to debt ratio. That is unbelievable. And that's also an indicator for poor management, guys. All right. You've got that little cash and you've allowed your debt to build up to £2.63 billion. But then to be fair as well, they are a victim of the global lockdown. I mean, I read somewhere that they managed to only collect 30% of their rent from all of the shops in their shopping centres. So they're struggling really hard, guys. Here are the three best UK residential stocks in my opinion. Okay, so we have Taylor Wimpey PLC, which is actually a position I started building on last week when the news first broke. So I already have about, I think it's about 500 shares in Taylor Wimpey. I'm not too sure. I'll double check that. But yeah, I have about 500 shares in Taylor Wimpey. My second stock, which I can't wait to get my hands on next week, is Rightmove PLC. Okay, guys, and the third stock that we're going to be looking at is Persimmon or Persimmon. I'm not entirely sure how you pronounce it, but it's Persimmon PLC. And let's move on to the financials. First stock, as I mentioned, is Taylor Wimpey. The ticker symbol is TW.L. So Taylor Wimpey operates a residential developer in the UK and in Spain. And the company builds various homes such as 1 and 2 bedroom apartments to 6 bedroom detached houses. And they've been around for time. Look at that. Taylor Wimpey was founded in 1880 and is headquarters in High Wycombe. So that's their description. Let's take a look at their financials. So straight off the bat, guys, they've got a PE ratio of 6.65. As Peter Lynch likes to describe it, your price to earning ratio at 6.65, that pretty much means if you invest today, it will take you about 6.5 years to get a return on your investment, which is amazing. Alright guys, so taking a look at their income statement, you can see they've had growing revenue year on year since 2016, 2017, 18, and now even 2019. They've done really well. And as you can see, guys, that also reflects on their net income because that's also been growing year on year. So they've had no problems with their earnings so far. So moving on to their balance sheet, guys, they have a total cash position of £630 million. And look at their long-term debt, guys. They have £84 million in long-term debt. So their total cash position sits at £630 million and their total debt is only £84 million. That gets me so excited when I see that. Like, that is crazy. Their current asset is sitting at £4.9 billion, and their current liabilities is sitting at 1.13 billion. Okay, their stockholder equity has also been growing year on year, and that pretty much is an indicator that their assets are growing faster than their liabilities. So straight away, guys, these guys have a solid income statement. They also have a solid balance sheet, in my opinion. Of course, I want to have a look at their free cash position. Now, this is probably the only negative, really. Their free cash position has been going up and then going down. It's not been stable, but it has been positive. So I think Taylor Wimpey has solid financials. Also, guys, Taylor Wimpey has an operating margin of 19.33%, and they've got a healthy profit margin of 15%. All right, guys, and moving on to our second stock, we have Rightmove PLC. The ticker symbol here is RMV.L. Okay, so if you're not familiar with Rightmove, they operate a property portal in the UK. So in a nutshell, guys, if you wanted to buy a property or look for a property to rent, you typically go on Rightmove and it gives you a list of properties in that area, okay? So for my US audience, your version is Zillow, but in this country, our version of Zillow is Rightmove. So let's take a look at Rightmove's financials, and this will probably impress you. Look at their operating margins. The operating margins is sitting at 73%. That is amazing. So for every £100 that the company makes in revenue, it keeps £73 of that as earnings. Madness. But if you think about it, they don't really have much overheads. All they've got is a website. You know, if I've listed properties on Rightmove before and you pay them listing fees, you know, and they don't do anything, literally, they do not do anything. I list a property, I put the description in, I put the pictures of the property up. They don't do anything, they just create a platform. So that's why their operating margins is so high, because they don't really do anything. They're just the middleman. So they connect the sellers to the buyers, essentially, or the renters to the landlords. And take a look at their total cash position, guys. They have 36 million in cash, and they also have 12 million in debt. Their current ratio is not as good as Taylor Wimpey. I give it that. Its current ratio is sitting at 1.43. But also, guys, looking at their cash flow statement, you can see their cash flow statement is positive, and it has also been growing year on year. Also, guys, I thought it would be quite interesting to show you the insider transactions that's been taking place. So as you can see here, Rightmove have been buying back their own shares. They've been very busy buying back their own shares. Also, you've got their CEO and managers as well have been buying. They've all been buying shares. So when you look at that, when you've got share buybacks and you've also got the CEOs and managing directors and whatnot buying back shares, that's an indicator that they think that this stock is severely undervalued. So I can't wait for the market to open on Monday, and I'm going to start building my position in Rightmove. All right. And also, guys, I just spotted this. Look at their growing revenue. It's beautiful. Look at their growing earnings as well. Year on year growth. This is something you want to see in a business before you invest. Okay, guys, so our third company is Persimmon, or Persimmon. I don't even know if I'm pronouncing that correctly. But the ticker symbol, guys, is this PSN.L. All right, they have a PE ratio of 8.48, and they're also a residential developer. Okay, all right, guys, and I'm going to take you to their operating margins. They have an operating margin, very healthy operating margin of 28.23%, with a profit margin of 23.26%. So again, very healthy numbers. As I mentioned on the Rightmove segment, you know, with an operating margin of 28%, that means £28 of every £100 it makes is kept as earnings. Another reason why Persimmon caught my attention, guys, is just their cash position. Look at that. They have £843 million in cash. And then look at their debt. Look at that. They have 8.9 million in debt. That's crazy. And they have a beautiful current ratio of 4.08. So they have a much better current ratio than Taylor Wimpey. Okay, guys, and take a look at their cash flow statement. Their free cash flow position actually has been decreasing year on year. So if you are deciding to invest in this company, you definitely want to keep an eye on the free cash flow position. Alright, guys, and taking a look at their insider transactions, funny enough, they've actually been doing the opposite. They've been selling their stock as of recent. Alright, guys, and lastly, all of these companies are available on Trading 212, and you'll be shocked at the price. Let's go with Rightmove. So Rightmove is one of my favorite positions. If you wanted to buy one share of Rightmove, it will cost you a fiver, guys, a fiver. That's incredible. That gets me so excited. I can't wait for Monday. But yeah, Rightmove's on Trading 212. If you wanted to pick up some shares in Taylor Wimpey, Taylor Wimpey, guys, will cost you, feast your eyes on this, £1.38p to buy Taylor Wimpey. That is crazy cheap. That's mad. Like, it would literally, chicken and chips actually costs more money than to buy Taylor Wimpey. And you've had a look at their financials. You can see why the company are buying back their own shares, because they're like, yo, this is ridiculously cheap. And lastly, guys, Per Simon, but their shares currently is going for 22 quid. Okay, so 22 quid, you'll get your hands on one share of Per Simon. These stocks, guys, are really, really cheap in comparison to our US counterparts. And that wraps up my analysis, guys. Guys, I couldn't quite believe how cheap UK stocks actually are. Some of them have some great future growth potential. But remember, guys, approach with caution, because out of all the stocks that are listed today, I would say Rightmove has the biggest moat and the strongest competitive advantage in this particular sector. With that said, guys, make sure you do your own due diligence and analysis before you decide to invest in any stock or company. A fantastic book that I always recommend on my channel is One Up on Wall Street by Peter Lynch. Absolutely incredible book. I recommend it all the time because it really helped me with my investing. And if you do want to start investing, I would highly recommend my broker, Trading 212. The link is in the description below, guys. And if you sign up, Trading 212 will give you a free share and will give me a free share. With all that said, guys, don't forget to smash the like button and hit the subscribe button and notification bell if you want to receive more content from me. Thank you guys for watching, and I hope to catch you in the next video. Peace.